Hey, if you're a business owner and you need cash, like yesterday, then you're in the right place. We're going to lay out the entire roadmap for alternative business funding. I'm talking from the moment you apply to the second that money hits your account.
So let me ask you something. Does this sound familiar? Your business is taking off, there's a huge opportunity right in front of you, but the bank says no. Or maybe they say wait, which can feel just as bad, right? Well, if that's you, then listen up. This kind of funding was literally made for you.
All right, so here's our game plan. We're going to walk through this whole thing just like you would as an applicant. First up, what even is this funding? Then we'll figure out if you're a good fit. After that, we'll get your application checklist ready, see what happens after you hit submit, and finally, the big one. We'll break down exactly how you pay it back.
Okay, let's kick things off with the most basic question of all. What exactly is this stuff? Let's define it.
You know, the easiest way to think about it is this. It's for businesses that are maybe what you'd call unbankable. Or, hey, maybe you are bankable, but you just can't afford to wait. I mean, if you have to wait weeks or even months for a bank to make up its mind, this is your go-to alternative.
And we're not talking about small change here. The amounts can range from 10 grand all the way up to 2 million bucks. So the big question is, how much can you expect? Well, a really good rule of thumb is that you'll likely get approved for somewhere between half your monthly revenue and sometimes even up to double your monthly revenue. It's all about your cash flow.
This right here, this shows the trade-off perfectly. With this kind of funding, you're basically trading long terms for incredible speed. We're talking repayment over months, not years. And check out that last point. This is huge. No collateral. That means you generally don't have to put up your house or other personal assets. It's a totally different ballgame compared to a bank.
Okay, so now you know what it is. The next logical question, of course, is are you a good fit? Is your business going to qualify? Let's dig into the nitty-gritty of the requirements.
All right, here are the bare minimums, the absolute basics. You've got to be in business for at least 4 months, though honestly, most lenders really want to see at least a year. Your sales need to hit at least $15,000 a month for the last 3 months straight. You absolutely need a business checking account, no exceptions there. And the owner's FICO score needs to be 500 or better.
Okay, now pay close attention to this, because this slide is so important. This is what the underwriters are looking at beyond those minimum numbers. It's all about the health of your bank account. A high average daily balance, frequent deposits, that tells them you've got strong, consistent cash flow. It shows you have a buffer. But on the other hand, a bunch of days with a negative balance, that's a huge red flag. It doesn't matter how high your sales are, it signals you might be having trouble managing your cash. So, if you're nodding along, checking all those boxes, and thinking, hey, this sounds like me, then it's time to get practical. Let's put together your application checklist. Seriously, having this stuff ready to go will make the whole process a total breeze.
The process itself is actually super simple. You'll fill out a quick online application and then upload your last 3 months of business bank statements. And here's a key point. That's pretty much all you need to get an initial offer. But, and this is a big but, before any actual money is wired, you're also going to need a voided business check and the owner's driver's license. My advice, just have it all ready from the get-go. It'll save you time.
All right, you've gathered your docs, you've hit that submit button, and now what? What happens in that black box between applying and seeing the money in your account? Let's map out that exact path.
So here it is, the funding pipeline, step by step. You apply online, you get an offer. You like the offers, so you sign the documents. All done electronically, super easy. But wait, look closely. Signing is not the final step. After you sign, there's still a bank verification, a quick final call, and then, and only then, do the funds get deposited.
And I really want to hammer this point home, because this is where a lot of people get tripped up. Just because you sign the contract does not mean the money is guaranteed. That is a huge misconception. The deal is not done until you clear that final underwriting step. So you got to manage your expectations here, okay?
So you might be wondering, well, why would that even happen? It's simple, really. The lender does one last, final, real-time check of your bank account. They're just looking for any last-minute surprises, like, did your sales suddenly fall off a cliff? Did you go out and get another loan from someone else yesterday? You know, things like that. This final check, it's really there to protect everybody involved, including you.
Okay, we've talked about what this funding is, who it's for, and how the process works. But now we're at what is arguably the most important piece of the puzzle, the cost. How much is this money going to cost you, and how exactly do you pay it back?
Right, so first things first, forget about interest rates. This kind of funding doesn't work that way. Instead, it uses something called a factor rate to figure out your cost of capital. And cost of capital is just a fancy way of saying the total, all-in amount you're going to pay back. Simple as that.
Typically, you're going to see a factor rate somewhere between 1.15 and 1.5. And the math is super easy. To find out your total payback, you just multiply the amount you get funded by whatever your factor is. That's it. It's incredibly straightforward, no hidden fees or complex calculations.
Let's run a quick example, just to make it crystal clear. Say you get $20,000 and your factor rate is 1.35. You just multiply 20,000 by 1.35 and you get $27,000. That's your total payback amount. Exactly. No weird compounding interest, no confusing amortization schedules to worry about.
So how do you actually pay that back? Well, this is another key difference from a bank loan. Payments are automatically pulled from your business account every day, or sometimes every week. And notice what's not there: monthly payments. There are no monthly options. And a lot of business owners actually love this because it's just a small percentage of their sales, usually between 7 and 15%. It helps keep cash flow smooth. Oh, and bonus, if you can pay it off early, a lot of times you can get a nice little discount.
Okay, let's boil this all down to the absolute key takeaways. What do you really need to remember? First, this is for fast, short-term money when a bank isn't the right fit. Second, your daily banking habits are just as important, maybe even more important, than your total sales. Third, and don't forget this one, signing the papers does not mean you're approved. It's not final till after that bank verification. And last, repayment is automatic, happening in small daily or weekly chunks.
So there you have it. We've laid out the entire roadmap from A to Z, from qualifying all the way to paying it back. See, when you know the steps, the whole process is actually pretty transparent. So now the only question left is the one only you can answer. Now that you've got all this info, what's the right next move to take your business to the next level?